Well, joining me from Montreal to discuss more on how the trade talks are going is Yan Wang, partner and chief emerging markets and China strategist at Alpine Macro. Thank you for joining us.
Pleasure to be here.
So President Trump said the deal will only be finalized when he and President Xi meet in person. But Trump also said that the meeting is not happening before that March 1st deadline. So what does that mean for a possible deal or that 25% tariff kicking in?
Well, we all know that President Trump says a lot of things, right? So he also said he's flexible about the deadline. He also says he and President Xi Jinping will probably meet in Mar-a-Lago. So, I think obviously the situation is still very fluid. There's a lot of posturing probably, but I don't think we should take what he says literally. I think at the end of the day, we want to emphasize that we see the two sides want to make a deal. For the President Trump, he's aiming for re-election for next year, so he needs a strong economy. If the trade war with China continues to drag on, then the economy will continue to weaken. Then it will undermine his chance of being re-elected. And on the Chinese side, we obviously know China is the weaker partner, a weaker player in this power struggle, and the Chinese economy is also slowing down. So Chinese policymakers also need to solve this trade conflict for the economy to recover. So I do believe.
It's interesting. You mentioned this idea of some of the consequences of trade wars, and one of them is a stronger dollar. Now, that makes U.S. exports more expensive for foreign consumers, and then cheaper imports more attractive to Americans. So it seems protectionism will actually widen the trade deficit.
I think the trade deficit has widened for two reasons. One is you mentioned the strong dollar. The other reason is the U.S. economy last year was very strong, so domestic demand in the U.S. was strong. So that's why it's widened the deficit. So I think going forward, if the dollar begins to soften, if the U.S. economy weakens a little bit, I think the trade deficit will probably weaken. Trade deficit will probably decrease from here.
Now, when looking at the trade imbalance with China, which was what sparked this trade standoff, we hear a lot of focus on goods and not so much on services. So give us an idea. What does this overall trade relationship look like when both are considered?
Yes, I think the trade side is the most visible part of the trade imbalance. So China runs like 400 billion US dollar surplus with the US, and this is the number that the US administration keep talking about. But you are right. On the other side, China runs a big deficit in service front. Chinese people go to the U.S. for education, for tourism. I think that's a very big part of the trade side of the two economies that I think probably they intentionally avoid talking about.
Now, in terms of the concessions that both sides are looking at to ensure that a deal can actually go through, what are the main things that both sides are looking for?
So far, we see clearly we are seeing two things. One is the U.S. tries to reduce the deficit with China on the trade front, on tradable goods. The other one is U.S. tries to push China to correct some, what they say, the unfair unfair business practices. So I think China now is trying to do a lot of things to correct both issues. So that's why I think there are high odds the two sides can make a deal at the end of this month. So obviously, we cannot expect both countries to solve all the major issues, big structural issues. But I think they would be able to accomplish enough to make them claim victory and to move on. So I think now for what China has been doing is they have promised to purchase more U.S. goods. And also they have tried to address the issues that U.S. has been complaining about, like the forced technology transfer. For example, they have fast-track new foreign investment law. They have published this new so-called negative list for all for both private enterprises and foreign investment firms. So I think China, the government also tries to create a kind of more rule-based, more transparent investment procedure for all investors to follow.
Now, we saw that the U.S. is pushing its U.S. Reciprocal Trade Act. So give us a bit more information about what that entails and how that will actually work in practice, given the U.S. and China's different positions in global industrial chains.
Yeah, well, I think it's a very complicated situation. I don't think it's practical. I don't think it's reasonable, and I think it's very unlikely that will be passed by the Congress. And I think if we look at a country's trade picture, trade profile, we cannot just talk about specific tariff rates on specific items. We need to look at the tariff rate on the trade-weighted term. So on that front, the U.S. average tariff based on trade-weighted terms is not particularly low compared with other countries. Even China is slightly higher, but overall, the tariff rates are not that low in the U.S. So I don't think the new legislation that Trump wants to have is reasonable to begin with.
All right, thank you so much. Yan Wang there, partner and the Chief Emerging Markets and China Strategist at Alpine Macro.